Hey everyone, welcome back to my channel Million Dollar Recipe. For those of you who are new here, today is day 45 of my journey to $1 million using the hybrid recipe strategy on DQQQ. Alongside my daily portfolio updates, I also cover key stock market news and analysis. But before we head into the portfolio part, today I'm diving straight into Tesla's Q1 2025 earnings report. So if you're new to investing or just curious about what these reports mean, don't worry, I'm going to break it all down in super simple terms. And by the end of this video, you will understand how Tesla did in the first 3 months of 2025, what the numbers mean, and why they matter. Let's get started. First off, let's cover the basics. An earnings report is like a company's report card, and every 3 months, companies like Tesla tell the world how much money they made, how many products they sold, and other important stuff. This helps investors decide if the company is doing well or struggling. Tesla released their Q1 2025 earnings report today, covering January to March. Let's unpack the key points. First is revenue. It is the total money a company brings in from selling its products or services. Think of it as the cash flowing into Tesla's bank account from selling cars, energy products, and other stuff. So Tesla reported $19.34 billion. This is less than $21.3 billion from Q1 2024, a drop of about 9%. Analysts who are like financial experts expected Tesla to make around $21.11 billion, so Tesla fell short. Why? Fewer car sales and some discounts on their vehicles lowered the revenue. So in simple terms, Tesla made less money than last year and less than what people expected. Next is earnings per share. It tells you how much profit a company makes for each share of its stock. So if you own Tesla stock, this number shows how much of the company's profit belongs to you per share. It is calculated by dividing the company's total profit by the number of shares out there. So Tesla reported 21 cents per share and analysts expected 39 cents. So Tesla missed the mark. Last year, Tesla's EPS was 45 cents, so profits per share are down. This means Tesla made less profit for each share compared to what people hoped. To give you a simple example, imagine you and your friends split a pizza and each person was supposed to get 2 slices, but this time you only got 1 slice each because there wasn't enough pizza. That is what happened with Tesla's profits. Next, Tesla's main business is selling electric cars, so the number of vehicles they deliver is a big deal. So Tesla delivered 681 vehicles in Q1. This is 13% fewer cars than what they delivered in Q1 of 2024, and analysts expected around 360 to 370,000 deliveries, so Tesla underperformed. Why? Tesla was upgrading its factories to build a new version of the Model Y, which paused production for a few weeks. And also, some people think demand for Tesla cars dropped because of higher prices or competition from other brands. So in simpler terms, Tesla sold fewer cars than last year, partly because they were busy upgrading their factories. It's like a bakery closing for a day to install a new oven, as a result of which you make fewer cupcakes that day. And Tesla doesn't just make cars. They also sell energy storage products like big batteries for homes and businesses. These store electricity from solar panels or the grid. And apparently, in Q1, Tesla deployed 10.4 gigawatt hours of energy storage, and this is a huge jump from 4.05 in Q1 of 2024, over 150% growth. So this part of Tesla's business is growing fast and makes good profits because these products have higher margins. Higher margins means Tesla keeps more money after paying for materials and production. So basically, Tesla's energy business is like a side hustle that is blowing up. So while car sales slowed, their battery business is making serious money. So what is this gross margin? It is the per percentage of revenue left after paying for the costs of making products like car parts or factory expenses. A higher margin means company keeps more money as profit. Tesla reported 16.3% as their quarter one gross margin. This is down from 17.4% in quarter one of 2024, but slightly better than the 16.1% analysts expected. Discounts on cars and lower sales hurt margins, but Tesla's cost cutting, like making cars cheaper to build, helped a bit. Next, free cash flow is the money a company has left after paying for its operations and big investments. It's like the cash you have after paying your bills and buying a new phone. So Tesla reported $664 million as their quarter one free cash flow. This is a big improvement from a negative $2.53 billion in quarter one of 2024. That is when Tesla spent a lot on inventory and AI tech. But analysts expected $1.08 billion, so Tesla fell short, but still having a positive cash flow is a good sign. So Tesla's earnings report also gave clues about what is next, which got investors excited despite the weaker numbers. The first one is Tesla planning to launch unsupervised FSD, which is full self-driving, as a paid service in Austin, Texas by June 2025. This means cars could drive themselves without a human watching, which could be a game changer. And FSD is Tesla's AI tech that helps cars navigate roads. And Tesla also confirmed they're working on more affordable car models with production starting in mid-2025. This could attract more customers who can't afford pricier models like the Model Y. And Tesla is also working on a driverless taxi service called Cybercab, also launching in June 2025. And this could make money by offering rides without human drivers. So a simple takeaway, Tesla is betting big on self-driving cars and cheaper models to sell more in the future. Even though Tesla missed expectations, their stock jumped around 4% post-market after the release of earnings report. Why? Because investors are excited about FSD, robotaxis, and the energy storage group. They're looking past the weak numbers and betting on Tesla's future plans. Also, some think the bad news was already priced in, meaning the stock price already dropped earlier because people expected a tough quarter. So in just a simple terms, the stock went up because people are hopeful about Tesla's big ideas. Even if this quarter wasn't great, it's like cheering for a team that lost a game but has a star player ready to shine next season. So what are some challenges which Tesla faced? It had some bumps in the road, which is switching to the new Model Y paused production, leading to fewer cars made and sold. And some customers might be waiting for cheaper models or choosing competitors' cars. So there is a lower demand. And also, there is also talk of brand damage because of CEO Elon Musk's political activities, which sparked protests and boycotts. And also, the new US tariffs could raise Tesla's costs as they import parts from China. Tesla actually warned that trade policies might hurt their business. So if you're thinking about investing in Tesla or just learning about stocks, this report shows how companies balance short-term struggles with long-term dreams. Tesla's car sales took a hit, but their energy business and self-driving tech could be huge in the future. Understanding these numbers helps you decide if Tesla stock is worth buying or if you should wait. What do you think about Tesla's earnings? Are you bullish on their self-driving tech or worried about the challenges? Drop a comment below. Let's chat. Now on to my today's trade. I started my day as usual by checking where the opening price and closing price of the previous day's candle is, and they were both below 12 EMA, so I continued with $200 to $250 investment limit. Then I switched to the 5 minutes time frame. TQQQ opened about 12 EMA, so I had to wait for my usual setup, which is dip below the 12 EMA and then bounce back above. The dip happened around 10:30 and the bounce back around 11, which triggered my entry. So I bought 5 units at 45.43, investing $227. And at the end of the session, TQQQ closed at 45.06, up by 7.64%. And the market overall was in green today. S&P 500 was up 2.51%, Nasdaq 100 up 2.63%, and Dow Jones up 1,000 points. There is no specific reasons as to what happened today that led to this. And also this could be temporary. Can't say anything for sure. But what I think could be reason for today's performance is rumors and headlines about new US trade deals, including potential talks with India and Israel. It boosted market sentiment and investors appeared to bet on renewed global trade momentum, easing concerns over tariff-related volatility that had pressured markets. And a reported 0.4% drop in the March producer price index signaled cooling inflation, and even consumer price index reported the same, raising hopes for potential Federal Reserve rate cuts in 2025. This likely encouraged buying as lower inflation could support economic growth without aggressive monetary tightening. Anyway, exercise caution as markets are wild and volatile and so uncertain. So make your decisions carefully and also don't panic, but also stay disciplined. Now on to my portfolio update. My total investment till date is $99.38 with 169 units in my holdings. And today TQQ closed at 45.06, which brings the market value of my holdings to $76.15. And my average price per unit is 58.80, which means I'm still sitting on a net loss of 23.23, translating to a 23% decline. And so far TQQ has dropped 50% since I started, but my portfolio only 23%, which means I've outperformed by 27%. So that's all for today's update. If you enjoyed this video, please like, share, subscribe for more such updates. Thank you. See you in the next video.